Hey everyone, welcome back to my channel. In this video, I'm going to show you how to invest in the stock market using Robinhood. We're going to break this down into 3 different parts. Part 1 is going to cover basic FAQs. How to start, how to find stocks, how to buy stocks, and how to limit risk. Part 2 is going to cover market research. What to look for, what the different stats mean, where to find income statements, how to determine if a stock is potentially a good or a bad deal. And part 3 is going to cover the cool features Robinhood has to offer: fractional shares, dividend reinvestment, and cash management. And at the end of this video, I will be sharing with you how you can get free stocks yourself, so make sure you stick around for that. I make videos covering online business, personal finance, investing, and entrepreneurship, so if that sounds interesting to you, or if you like free, valuable information, then don't forget to hit the subscribe button and drop a like to stimulate the YouTube algorithm. I really appreciate all the support. So let's get started. Okay, so go to the App Store and download the Robinhood app. It doesn't matter if you have an iPhone or an Android. Once the app is finished downloading, you are eligible for a free stock by using my affiliate link. Click the link in the description of this video using your phone, and it will automatically take you to the app to claim your free stock. How to buy stocks. When you're buying a stock, you're buying a piece of a company, which is cool. In this example, we're going to go to the most popular stocks in Robinhood. Now, these aren't necessarily the best stocks to buy, these are just the most popular. So I got a few Disney, a few Microsoft, a few Apple. Let's pretend I want to buy 1 share of Microsoft. You can see the stock price from the past 5 years, 1 year, 3 months, and you can scroll your finger to see the different prices over time. Click the trade or buy button and this screen will appear. Now I'm just going to type in 1 share. You can see the market price and the estimated cost. And to keep it simple, I'm just going to say, okay, cool, click review. Now it might say you don't have enough buying power, which means you haven't put in a deposit yet. Once you've done that, you can swipe up and the order has been placed. Congratulations, you are now a shareholder. You own a very small percentage of Microsoft. There are 2 main ways to make money with this share. The first way is through capital gains. Microsoft will hopefully continue to grow, and as a result, the stock price will increase in value. Eventually, I'll want to cash out, so I can sell my share for a profit. The second way is through dividends. A dividend is a payment from a company on a regular basis. Sometimes it's annually, quarterly, or even monthly. And companies do this as a thank you to investors for owning their stock. Many times you'll find these companies are well established, they've been around, and paying a dividend is a good incentive to get investors like you interested. Now, some companies don't pay dividends. This is because they'd rather reinvest those profits back into the business. Let's take Amazon, for example. Amazon has been expanding rapidly for years. Their cash is better used for growing their business rather than paying out shareholders. Microsoft pays a dividend every quarter to its shareholders. You can find out approximately how much that is by scrolling down to expected EPS, earnings per share. What if the stock price goes down over time? What if Microsoft goes bankrupt tomorrow? Well, I just lost all my money. While that probably wouldn't happen to Microsoft, this could happen to any company. So how do you decrease risk when you're buying stocks? You decrease risk by diversifying your portfolio. You don't want to put all your money into 1 stock. There are a few ways you can diversify. You can buy individual stocks spread across different industries, or you can invest in an ETF, an exchange traded fund. Earlier in this video, I explained that when you're buying a stock, you are buying a piece of a company. When you're buying into an ETF, you're buying a piece of many stocks at the same time, a basket of stocks. So let's take a look at one of the most popular ETFs, VOO, or VOO, which is Vanguard's S&P 500 ETF. Vanguard is a financial institution, brokerage firm that you can also use for investing. For example, I have my retirement account set up with them, so if that's something that interests you, you can find that video up here in the cards. So the S&P 500 represents 500 large companies in the United States. Many consider it to be one of the best representations of the US stock market. Here are some of the companies that are included in Vanguard's S&P 500 ETF. Alphabet, which is Google, Costco, Pepsi, Nike, Clorox, Allstate, Starbucks. There's so many more, adding up to a total of 500 companies. So this helps with risk because if one company goes bankrupt, it's not that big of a deal. The other 499 companies would carry the weight for that one loss, and you as an investor wouldn't feel that much of an effect. On the flip side, if one company's stock price jumps up astronomically, you're not really going to feel that effect either. Overall, investing in an ETF decreases risk because you are diversifying. Now it's time for part 2. Let's talk about market research. First, I want to point out that there is an awful lot of noise out there. Who's the right person to listen to? Which media source is reliable? Who can I trust? Well, maybe we should take some advice from Warren Buffett, who's arguably the greatest investor of all time. Just buy an S&P index fund and sit for the next 50 years. Well, the answer doesn't really get any more clear than that. Now, if you still want to invest in individual stocks after hearing that, then these are some things you can look for. Everyone likes to talk about the numbers, right? The numbers don't lie. But it's also important to look at the culture of a company. Where has the company been? What direction is it heading? Who's the CEO? Is it Papa John? These are all things that you want to consider. Robinhood gives you a summary of the news related to the stocks you're interested in, which is great for convenience, but it's important to do your own research too. If you're interested in investing in a particular company, go to their website and find their investor relations page. This is where you can find a lot more in-depth information. Income statements, cash flow statements, balance sheets, management bios, and more. Now let's go back to Robinhood and go over what the basic stats mean. On the left you have open, high, low. Open means the price of the stock when the market opened. High and low mean the current high and low values for the day. Then it's pretty self-explanatory. 52-week high and 52-week low tell you how high and how low the value has been over the past year. Volume means how much the stock is being traded on the current day you're looking at it. Average volume means how much it's being traded on a typical day. Market cap tells you how much the company is worth. PE ratio, or price to earnings ratio, is another way to value a company. The ratio compares the price of its stock to its earnings per share. Low or high PE ratios aren't inherently good or bad. If the ratio is low, it could mean that investors are losing confidence, or the company's earnings are growing quickly and investors simply haven't noticed yet. Dividend yield refers to a stock's annual dividend payments to shareholders, expressed as a percentage to the stock's current price. Those are the main stats that Robinhood shows. Now, I recommend that you go ahead and check out other sources such as Yahoo Finance, just to make sure that all the information is accurate. Now, with finding good stocks, I'm not a certified financial advisor, okay? So you need to do your own research and make your own judgment. But I'll go ahead and tell you what I started out with, and that was VOO, Vanguard's S&P 500 ETF. And the reason why, again, was because it's diversified right off the bat. Can't go wrong. There are studies that show that most people can't beat the returns made from the S&P 500 ETF, not even the professionals. And that's because no one really knows exactly what's going to happen. Most people who have succeeded in the stock market are people who have been investing over a long period of time. It's the idea of buying stocks that can reap rewards for the many years to come. There is no way to know for sure if a stock is going to do well in the future, but here are some indicators you can use to help make a decision. The 5-year track record, your own belief in the company. Personally, I invest in companies that I use myself. The numbers, balance sheets, income statements, statements of cash flow, the volatility of a stock. Volatility relates to the up and down movement. For example, let's say a stock is at one price, then it rapidly shifts up or down over a short period of time. This stock is considered highly volatile. Vice versa, if the price doesn't change much, then the stock has low volatility. High volatility brings uncertainty, but it does present opportunities to potentially make higher profits. There's also higher risk. Part 3, now I'm going to go over some of the features Robinhood has to offer. The app offers fractional shares, which is very powerful because it allows you to buy expensive stocks for a fraction of the price. Amazon's stock price is currently over $2,000. Let's pretend you don't want to invest over $2,000, but maybe you could invest $50. Robinhood gives you the ability to invest in Amazon with that money. Another cool feature is dividend reinvestment. This allows you to automatically reinvest your dividends without having to do it manually. This is how compound interest is created. Cash management gives you the ability to earn 0.3% on any uninvested cash through your brokerage account. This is a variable rate that could go up or down over time. Finally, you can get free stocks by inviting friends, have them use your link, and then you can both get a free stock. Okay, so here are a few last thoughts before I end the video. Only invest what you can afford to lose. Start with a small amount of money and then build it up over a period of time. The best way to learn is by doing it yourself. Again, feel free to click my link in the description of this video to get yourself a free stock. You're not going to be perfect, but it is important to take that first step. Don't be afraid to learn from your mistakes. That's how you grow. Hey, so I really enjoy reading the comments in the videos, so make sure you leave your thoughts. Let me know where you are in your financial journey. I post weekly videos covering online business, personal finance, investing, and entrepreneurship, so make sure you subscribe and hit the like if you found any value from this video. Invest at your own risk. Thank you so much for watching this video. I can't wait to see you in the next one. Peace.